Right, ladies and gentlemen, I am back on the morning show. Did you guys miss me yesterday? I miss you guys. I tried to call in, but had too much going on in the morning. But I appreciate you guys. Heard you guys had a great show. We got a great show for you here today. Steve Strazza in the house. We got Izzy on the ones and twos. We got Chartmaster Flex, the one and only Alfonso. What's up, Fonz? Listen, we got a lot of things moving. Tesla absolutely ripping over the last week, getting back all of the selling that took place over the last week. I hope you weren't too busy trolling Elon Musk that you forgot to buy stock. That would be foolish now, wouldn't it? We got Bitcoin moving. We got Ethereum breaking out. And man, the list of new highs continues to get longer. We got David Settle in the house. Let's hit it. Izzy, do it. All right, we are back on the morning show. I gotta tell you guys, this whole Jersey Shore thing, it is fantastic. It is fantastic. I could get to New York City in no time, go over there in the city, do what I gotta do, come right back. I can head over to DC or Baltimore or Philly, do what I gotta do, head right back. I'm kind of digging this, not gonna lie. Listen, there's some parts of the Jersey Shore that suck. It's like grimy with grimy people, and you don't want to be there. And there are some parts of the Jersey Shore that are fantastic. So I want to give a big shout out to Avalon and Stone Harbor. It is lovely. I had a nice little drive through like Vineland, which is kind of like inland a little bit. A lot of wineries in the area. What's really interesting about this area here in the Jersey Shore is that you get cooler nights, right? So part of the problem of bad wine in America is you're not getting that, as they say, the difference between the highs and the lows and the temperature. You're not getting those cool nights. Here you are. So they're making some decent wine. I'm not drinking it, but whatever. What are you gonna do? All right, we got some futures moving this morning. We got stocks on the move. Spencer is easing his way back in. I've been seeing Spencer popping into some meetings, couple of slacks here and there. Looks to me like the family is doing great. So, Spencer, we're really happy for you. Looking forward to having you back. What do you say we get into a little state of the markets, Izzy? Shall we? Uh Moon Man, I like the Poconos too. I got to tell you, I really like the Poconos too. I like that you could use it all year round, but it's different, very different vibe. The Poconos versus down in Avalon, very very different vibe. All right, we got the Dow futures this morning up a hundy, up a cool hundy. That's 43,000 for the Dow Jones Industrial Average. This is the most important stock market index on the planet. Let's not forget that. S&P 500 futures up a third of a percent, 6,065 for the S&P 500. NASDAQ 100 futures leading the way this morning, up 100 handles. That's almost half a percent to the upside, over 22,000 for the NASDAQ 100. 30-year bond futures muted today, up slightly, just below 113. You got crude oil making moves. That crude oil back above 66, up 1.6% on the day. You got copper down a percent, 485. You got gold up 1%, 33.80. You got silver flat today at 36.60 with the volatility index getting absolutely decimated down to 16. This thing was at 60 just 2 months ago, back down to 16. Over in funny money land, of course, you got Bitcoin just under 110,000, down 600 on the day. Big day, a big week, I should say. Big day on Monday. Held in there yesterday just fine. Doing it again today. The longer this hangs out around 110, the higher the likelihood that we're going to see 120, 130 very quickly. You got ETH 2,800. Wow. Yesterday, rallying despite the fact that Bitcoin was not rallying. So both BTC and Ethereum had monster days on Monday. Ethereum continued yesterday, despite Bitcoin not participating. So the relative strength there continues to show up in the Ethereum. Solana making moves, leading the way this morning, up on Monday, up on Tuesday, up again today. So relative strength coming from Solana. 166 for Solana, by the way. Total crypto market cap, Mr. Spencer Israel, if you're out there listening, 3.41 trillion. 3.41 trillion. Mr. Steve Strazza, what stands out from this morning's futures?
I made it. You're right. You're spot on. We were looking at the ETH yesterday, actually, calls in the ETH.
Ooh, I got
I love this.
it. I got
Yeah, no, I
it.
love the bull flag in the ETH because it's not just a bull flag in ETH and US dollars. It's a bull flag in Ethereum in Bitcoin terms as well. So that ETH BTC
Ooh.
ratio, nice
Are
and tight.
you changing your denominators here, Mr. Strazza?
No, I'm just benching against the big dog, you know?
I think you're adjusting here for your denominator, and I love that sort of thing. I do. If you could throw up slide 2 there, please, Mr. Izzy. We got slide 2. This is the one right here. This is the one you guys want to see. This is a fantastic chart. Fantastic, I must say, is a fantastic. This is such a Strazza chart. This
Yeah.
chart screams Steve Strazza, does it not?
Well, that's exactly what I was talking about last week. That's starting line momentum.
All right, so
Nice
walk us
momentum.
through what happened. We're looking at a 1-day rate of change here in the
Mhm,
ratio
mhm,
between Ethereum and Bitcoin. Bitcoin's probably right around 2.1 trillion, 2.2, something like that.
mhm.
In market capitalization, you got ETH probably around 330 or so. How close am I?
No idea. I don't
What did I
really.
say? I said 2.2 and 330. That's what I
I'm
said,
shaking
right?
my head like I know. I don't think about
Hold
it.
on,
But
hold
whatever.
on. Ready? What did I say? What did I say? I said 2.2 and 330, right?
Mhm.
So
Yep.
Bitcoin market cap is 2.17. So it's pretty close. And what did I say?
Okay.
330 for Ethereum? It's actually 337. Not
Yeah.
bad. Not bad. The old man still got it. Not bad. Not bad.
How what kind of legs does this have? We'll see. Um, but some really big moves, some big leadership moves from Ethereum were sparked with similar starting line momentum in the past. You could see it off the 2020 lows, and then when it was ramping up in 2021 as well.
Dre Summers giving a big shout out to Louis on his ETH call 6 weeks ago. You're absolutely right. Very few people were as obnoxious as Louis was on
Hmm.
Ethereum at the time. It was almost like a joke. Nailed it. Shout out to Louis. Absolutely nailed it. Granted, to our credit, we weren't disagreeing with Louis at all. We were right there with him, but he was definitely way more obnoxious than you and I were, right?
Yeah, yeah, yeah. We're all doing the same stuff out here.
Yeah,
So,
we did not disagree, but he was pounding the table. So good for him.
um, I was up all night listening to people smarter than me argue about what quantum computing is and the future of quantum computing and whether it's even viable technology at all. And I'm glad to report back that they don't understand it either. Nobody understands.
Good.
Yeah, yeah,
Nice.
right. I
So I
know.
don't have to feel that stupid.
These stocks are up every day. A lot of bright people out there are calling them frauds, and they probably are. Dropping press releases. Some of them just like doing M&A like crazy out here, like Ion Q. Um, and this has become a true battleground space right now for the market, and and bulls are winning. Bulls usually win in bull markets, right? Even if only temporarily, JC, and that's okay. I would
Um,
I
I
would keep them
just,
tight, is what I'm saying. I would keep these tight. I would keep them
you
real
know,
tight. Short
you know,
leash.
hold on. Let's come back to this for a second, and I have a point that I want to make here.
Oh,
Throw up slide 3
uh,
there, please. Let's just come back to this.
you know, options are great for situations like this too. Have you heard? Options work out pretty well.
The way I learned it was that options give you options,
Yeah.
right?
Yeah.
Shout out, Sean. So here what we're looking at the ratio of Ethereum versus Bitcoin on a zoomed in basis. There's that ripper off the May lows. There's your
Uh-huh.
consolidation. There's your wave 2, if you will.
What are
And
we
if
doing
this
with
is
these
wave 3, and
waves?
Izzy, if you can go back to that last
What
chart,
what are
just to,
we doing with all the waves lately? What happened to you? You're a wave guy now?
I mean, listen, for us who are
Lot of
formally
waves.
trained, for us who are formally trained in the art of Elliot, it's
Mhm.
hard not to see it. It's hard not to see it. It's there. You get that
I read the
initial
same.
You get
I
that initial thrust higher, you get
uh
your digestion, and then you get the big move. Like, you're not
Sure.
going to argue with that. You know how markets work. Tell me I'm
No,
wrong.
I read the same book you did. I get it. I just you never used to do the Elliott thing. We're doing the Elliott thing. I get it. You can call these things different things,
Yeah.
you know. I get it. I just shout out Elliott Wave. Cool.
Shout out to the Elliott way. But I wanted to zoom
Shout out
out and
Todd
really.
Gordon. Shout out Todd Gordon, by the way. Speaking of Elliott Wave, how is
Todd
Todd
Gordon
Gordon?
doesn't talk about Elliott Wave anymore. It's like against his religion. He says he scares
He
people.
stopped and you started.
No, I've always been. I'm not an
Okay.
Elliottician, but when I see the waves, I mean, what do you want me to? What do you want to pretend they're not there? Pay no attention to the man behind the curtain.
When I see the waves, JC, when you see the waves, ride them.
There you go. Waves are for surfing, not for counting. Uh, so when you zoom out in this ratio, do you think there's any chance we get back to those 22 highs?
I don't even think you need to have a great trade here.
That's exactly right. Thank you.
I'm
Thank
not
you.
think, you know.
You couldn't have said it better. You could not have put it any better. It doesn't even need to get back there. Yes.
Yeah. I
Yep.
think, you're high and tight coming off what looks like a durable low here. That's all that matters from now. You watch this little flag, you get a pop higher, and you just keep riding something like
Do you
this. It
think
looks
it's a
good right now.
coincidence here that they're coming off the same levels?
No, no. Polarity is real, man. I respect polarity. You know.
How can you not?
Yeah.
How about throw up a little throw up the new slide 3, if you will, guys, please. Throw up the new slide 3. You got last week it was fascinating watching grown adults sitting there logging into Elon Musk's social media account only to troll Elon Musk. Like, what
Okay.
kind of psychotic fuck do you need to be to spend all day on somebody else's platform trolling the person that owns it? Like, think about like how crazy you need to be in your head to
Mm.
dedicate that much time to something like that. But what is even more hilarious is that imagine being one of these losers sitting there trolling Elon Musk all day and then being so busy trolling that you didn't even buy any stock. Oh, that must suck, dude. That must suck.
This has been an interesting situation, to say the least.
Isn't it funny though, watching people spending all their time trolling Elon Musk and then forgetting to buy some? You fucking idiots. Oh, hilarious. Speaking of
Well,
idiots,
you're getting a pop now. So Tesla is just a Trump tweet stock now. So you're getting a pop because Trump is like, Elon, you're not so bad now. I like you. And Elon's like, I'm sorry, Daddy. I didn't mean to say those things about you and Jeffrey Epstein. So they're both like rolling it all back a little bit here. So you're seeing Tesla come back off the
I
lows.
guess like I just feel like I'm not a 12-year-old girl, so like I don't care about any of that stuff. Like I can't imagine why a grown
Yeah,
adult
but
with
JC, you
assets.
have to. You chose to be in this. Now that's the game you're playing.
It's not the
Trump,
game that I'm playing.
Trump can
I don't give a shit whether Elon Musk and Trump are besties or hate each other. I don't care. I don't have time for
Trump
that.
takes an extra long poopy these days and decides to take a
How
shot at
old are we,
Elon.
bro?
You could be
How
down
old are we?
10%.
These are like 12-year-old girls, like little teenagers, like just
I
like
know.
gossiping. Like, oh, I can't even
Yeah.
imagine. But hold
I
on.
agree.
But I want to talk about something interesting. These
Mhm.
perma bears, they get together in these Twitter spaces and they don't have any friends, right? It's obvious that their family hates them, obviously. And then they
Oh,
all get together. They all get together on Twitter spaces and talk about how like the big end of the world is coming and you'll see. And like they're still doing that. Like you're seeing this,
yep,
right? Like these losers are still getting together on Twitter spaces and doing that
yep.
thing. Isn't that funny?
I don't do it. I won't do it. I won't go on. The only spaces that I will do is our spaces because it's gotten bad out there. That's all I'm going to say about that.
I'm not gonna lie. When I do my Friday night charting, after the kids go to sleep, we got new fresh
That's
weekly
different.
candles. I
That
I
one's
pop
fun.
into some Twitter
Yeah,
spaces and I listen to what the angry folks are angry about. Like, they're good
you're having
fades.
you're having fun though. Like I used to try to go on and have like honest like debates and discussions on these spaces, and it's low quality. So
Yeah,
don't
but
do that anymore.
yeah, but a late night on a Friday night as I'm looking for, looking at
Yeah,
charts, like, I want to eavesdrop on, and I don't like eavesdrop like anonymously. Like if I'm there, I'm there.
no,
I'm there. Which is
you
a
pop
bummer
in the
because then they
you
call me up and they want my opinion, only to disagree with me, obviously. But that's okay. That's good feedback.
Well, you pop into some fun spaces, whatever that one is. I always get the alert, but those guys are having
Uh,
fun.
yeah, sometimes we'll see. All right. So, what do you think? So these things made quite the comeback. Monster outside day on Monday. Follow through yesterday, right? So, as we always say, one candlestick doesn't make a trend, right? One day doesn't make a trend, one candle, one period, right? So you got the follow through yesterday after the outside day, confirming that in fact Monday was an outside day, and now getting a gap up higher in Tesla today. Um, continues to look great. I want to remind everyone that this is not about like some like creepy bromance between the richest guy and the most powerful guy. It's not what this is about. ARK, Kathy Wood's flagship fund has the highest short interest ever. Highest short interest ever. In other words, more investors are betting that the price of the ETF and the stocks in that ETF are going to go lower. More investors are betting against that than ever in history. And
Yeah,
Tesla, a bellwether of the archy, very archy, as Strazza would say, very archy. This Tesla,
yeah,
largest component, if I'm not mistaken, of ARK holdings and all of those things, all her
yeah, about
different funds.
10%.
So this trade is more of an unwind in sentiment. Obviously, you had the tampon guy dancing on stage, right? So like, you had real extremes in sentiment in Tesla, confirmed by what is actually happening in the short interest in ARK. So this has been a trade for an unwind in bearish sentiment, not just in ARK and speculative growth, but in equities in general, coming off some of the most pessimistic levels ever. Tesla being $1 trillion company, one of the largest companies in America, second largest stock in the consumer discretionary space. So remember, there's like real analysis being done here, not like the gossip columns about like Trump, right? They're two different things, right?
The number of components that are just working so well in the ARC universe right now is insane. If you look at the price action last Thursday, incredibly impressive. With Tesla down as much as it was, couldn't even touch ARC. ARC was unfazed, stayed high and tight, and the very next day ripped out of this flag. The strength in the speculative growth theme right now is pretty impressive, and it's getting better and better every day.
And Palantir, another bellwether of that group, pushing up against new all-time highs again today. Strazza, let me ask you this: getting back to the gossip columns,
Mm.
is Palantir one of those Trump trades? Because what's his face? Because there are a bunch of Republicans.
No, I mean, I don't think
Is this
so.
part of
It's
it or
gonna
no?
be. I don't think so. That I mean, they
This is
have. It's
more.
too.
This is more arcs. So Palantir is more arc squeeze than Trump.
Palantir is just like future. It's too big of a story. It's its own animal. It's always going to move on certain government headlines for sure. That's something that's never going to change. Palantir is a special story. The problem is now it's just become a really tough trade up here. Everybody's poured in. The whole world loves it now. It's not what it was 2 years ago. That's for sure. Speaking of sentiment, right? You want a stock like Palantir down in the teens when nobody wants it, everybody hates it, everybody's talking shit about how weird Alex Karp is. Now he's a god. Everybody thinks he's amazing. There's
Did you
memes
read
of
the
him
book?
all over the internet.
Did you
What?
read the book?
No.
You haven't read the book?
No, I would like to.
I think you
I
would
gotta get
really
it.
like it. I mean, you've had a man
Yeah, I would
crush on
like it. I
him
know.
much.
Yeah,
I mean, I don't really do man crushes, I guess.
I do.
You're
I
you,
do.
you're definitely a man crush guy, and you have a man
Yeah.
crush on him. You would really like it. You know what I really like about his book is that like he's just like pounding like he can't help himself. Like his passive aggressiveness towards companies
Yeah.
that are building like consumer apps to share pictures and get
Yeah.
food delivery. Like he just
Yeah.
rips these companies apart. Be like, you're
Big
just
wise
selling
guy.
your soul for a check.
Yeah. Yeah.
While we're here revolutionizing the defense industry, and like changing the world and adding value to humanity, and you're building apps so that food can get delivered faster. You know what I mean?
Yeah.
Like he just like every chapter, just like can't help himself. Like it's really funny, actually.
Big wise guy energy is one of those like too smart people where the rest of the world seems to very much frustrate him, which is fine.
Yes.
Speaking of my man crushes, you missed it yesterday. Man, I almost cried listening to Dara K at the White House tell his story. Just, I
And then
mean,
Dara K is the Uber guy.
yeah, true underdog story, American dream story. Really good stuff there. Parents fled the Iranian Revolution when he was a kid. Now he's the CEO of Uber. I mean, that's just really good stuff. Only in America. So cool
Not
shit.
bad. Not
Yeah.
bad.
Yeah.
Uber, a component of the Dow Jones
Hey,
Transportation Average.
you heard about these Trump accounts?
I have not. Fill me in. What is a Trump account?
Your babies won't get them. Just missed it. You tell them one day, hey, Trump almost gave you $1,000, but you were too soon.
Why don't I just give my own kids $1,000? What do I
You're
need
gonna
Trump
have
to give
to
my
now.
kids money for?
You're gonna have to level the playing field, my
Let
friend,
me
because
ask you
everybody,
this:
all the other babies have.
Let me ask you, what kind of communist shit is this that they're just giving babies money? What's that all about?
I think it's fantastic. I really do.
They're just
I'm
giving
a fan
babies
of it.
money. Is that what's happening?
Social Security's broken. There's nothing there. Why don't you try to set them up with a real saving situation? We got to change the way we're doing things. We got to change the way we're doing things there.
I don't
So
have to
this is
change it.
creating.
What I'm doing is going just fine for me. I don't need to change anything. What's this
I'm not
we?
thinking this isn't for you though, right? This is for and there's going to be like the parenting issue, which I was talking about yesterday too. But this isn't for you, right? This is for other people who might be unbanked or definitely uninvested for a great deal of their life, right? It's to try to start them and get them interested and get them invested and show them the power of compounding market returns.
So
I
we're gonna
like
show baby. We're gonna teach babies compound interest, or we're gonna let it happen, and then when they're older, be like, look, this is compound interest.
I don't think they could understand it like if they're a baby.
Um, I let us know when our guests are here. But I wanted to bring up two things. So I just finished reading this book right here, slide two. I thought it was great, and it fits right into what we do here. So this book was written in the '70s. Throw up slide two there, please. You know what we're trying to do here is that we're taking advantage of flaws in human behavior. This isn't about buying stocks with good fundamentals or whatever it is that people lie to you about. This is about taking advantage of the mispositioning in the market, looking for unwinds, and we're doing that again and again and again. So this is a great book. This one from Carlo Cipolla. Carlo Cipolla. Make sure I'm saying that right. Any Italians in the house? Strazza, you're like a Fugazi Italian. Am I saying that right, or you have no idea?
Mhm.
Carlo Cipolla. Am I saying that
No.
right?
No, I got nothing on that one.
No, you got nothing on that. I didn't
No,
think you
I
did.
got nothing on that one.
All right. So Carlo Cipolla, great book here. The Basic Laws of Human Stupidity. And what's great about it is that there's real like academic like analysis being done. Like when you analyze like what makes a stupid person, the damage that stupid people can cause society, the difference between stupid people and helpless people. Um, this was written in the '70s in Italian, and the author originally wanted it to be, he said that it can only work if you read in Italian. And I read it in English, and I thought it was fantastic. Great book, short book, by the way, short book, quick read. The Basic Laws of Human Stupidity by
Yeah,
Carlo Cipolla. And then say what you want about Nassim Taleb. I don't know much about him. I've seen
hold
him
on.
write some crazy
I know.
things.
I know something about him. I know something about Mr. Taleb.
He's always
I
looking for
I
black
remember
swans. I
I
saw one in the
I
zoo recently,
I
actually. I should
I
tell him.
remember Mr. Taleb about 2 years ago. He said I was crazy and Coinbase was going to 0. And I
He
said,
said you were
"Sir."
crazy.
Yes. And Coinbase was in the
He
40s. I said,
called
"No,
you
sir."
crazy.
Yes. I
Why is
said,
he
"No,
calling
sir."
you crazy?
Oh yeah. It's on the Twitter. That's on the Twitter. Me and the Talib. Mhm.
There's
Oh
either
yeah.
a picture of it or it didn't happen. Send a pic or it didn't happen. I will find that. So anyway, so say what you want about Mr. Taleb. I'm sure people have a bunch of opinions on him. I thought his forward was very well written for the book. So basically, they brought
Yeah.
it back from the '70s, translated it into English, and then Taleb did the forward. I thought very well done.
He's a teacher, right?
Probably, you know how these perma
Yeah.
bear academics, perma bear people are. They're usually like academics.
Yeah. Yeah.
So I would be surprised if he wasn't. But I don't want to hate on Taleb. This is not about it. I'm not trying to hate.
No, no.
Quite the
No, we
opposite. I'm
love
giving him
him.
his flowers. I thought it was
Me too.
very well done. Very well done.
Yep. 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 Good stuff.
I'm also reading the Value of Time. Is that the name of the book? Value of Time.
Well, that sounds nice. What's that about?
Is that what
Time?
it is? Oh, hold on. I have it right here. Hold on. Where is it? Hold on. Here, let me show you, and then we'll bring on our guest.
A lot of books for you lately,
Oh,
right? Like a lot of
The
books.
Price of Time. It's a
You
really
really
long
leaning
book, though. That's the only bummer.
you're really leaning into the bookshelf these days.
Dude, The Price of Time. Excellent, by the way. Excellent so far. Like, fantastic. Like, if you're a nerd about like markets and history and like the way, like, like interest rates, like in like 2000 BC and shit like that, like, sick. The Price of Time. Fantastic. It's really long though. That other one is super short.
Is it like
The stupid people one.
is it a history and market situation?
Yeah, it's a lot about like at least the beginning. It's about how like a lot of religion and cultures thought that like lending money and borrowing money and charging interest was like against the law and against like just kind of bad morals by doing that. It's why the Jews in the late 1800s like dominated Wall Street because the Christians were like, oh, we're not going to lend money, and the Jews was like, we'll lend you money all day. Are you kidding me? Right? So like so when you're wondering like why that was a big part, when you go and read and study, like, the Jewish community was happy to lend people money while the Christians were not, right? I mean, ultimately that changed, but that was a big thing. And just a lot of cultures over the years have been against that sort of behavior. It's
Yeah.
really, really fascinating. Yep. Shall we bring in David? I think we should.
No, Kenny?
I'm not sure if Kenny's in the house. Is Kenny in the house today?
He was here yesterday.
Let's bring in David. Bring him out. Bring him out. Bring him out. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, David, what's up?
Not much. How you doing?
No complaints. Reading books, getting some sun. Things could be worse. It's a bull market, David. I don't know if you heard.
Sounds like you're reading some big books about markets in the prehistoric times.
Listen, I mean, it's really, really fascinating. I mean, I just love the history of markets. I read the Bitcoin Standard. The Bitcoin Standard, I don't know, last year, maybe earlier this year. I don't know, it was probably last year. And what was great about the Bitcoin Standard is that had nothing to do with Bitcoin. Nothing. It was all about like the history of currencies and like, societies thousands of years ago and the types of currencies that they use. It has nothing to do with Bitcoin. It's a fantastic book.
Yeah, the nice thing about history is that humans are the same. Like our psychology is the same. I mean, that's what technical analysis is a measure of like human psychology put onto a visual platform. So it's always the same. Things might be different, like the name of the product might be different, but our psychology is always the same.
Guys, you hear what he's saying? This is such an important point. What David is saying right now is spot on. Markets evolve. You've got the decimalization of stocks. You've got options. You've got crypto and futures markets, and all kinds of things are evolving. But the one constant is us. It's the humans. And that's why when you see patterns today, and you look at patterns in the market in the 1930s and 40s and 50s, they look exactly the same. It's when you read Charles Dow's letters in the Wall Street Journal in the late 1800s. If you took the dates out and changed the names of the companies, you wouldn't know that they were written 140 years ago. Like, it's the same thing.
Yeah, we behave the same way. We always behave the same way.
And fortunately, with that comes opportunity, does it not, David?
Yes, yeah. This is, and that's, I see in this particular market, like right now with this rally that we're getting off this low that we had this year, it's a very, very similar, similar pattern to what we've already seen in the S&P 500. I think I shared that chart with Izzy there to show, but we're approaching the high point that we've had, the pre-correction high point that we had earlier this year, in a very, very similar way to what we did at the end of 2023, coming off of that pullback low point that we had in the fall of 2023, and where we had a pretty strong move. Like what are we up? I think it's like 17% on the chart that we're up off that low point right now, approaching the highs with the 17% move off of the, I think it was May 23rd low, May 21st low point. So it's been a nice, good run, and we're kind of like grinding right now. Every day is a grind. It's a small range, it's a small move, very, very typical of bullish moves, strong bullish moves, especially that like the one that we've been on. And what happened at the end of 2023, at the beginning of 2024, is we kind of stalled. I mean, we didn't go down, we didn't drop, we didn't even drop 5%, but we just kind of stalled with small ranges and small moves, with the idea that, oh, we're coming up on all-time highs. We're going to hit it. We're going to come back down, pull back, all this. We consolidated, and consolidations don't always turn into reversals, right? In this particular case, a consolidation actually turned into a pretty good continuation pattern. We ended up going 27% off of that October 2023 low point before we finally got a measly little 5% pullback. And it's a very similar pattern happening right now. Very similar pattern.
Can we get into the chart? I think the one you were describing, slide 10 there, Izzy, please. Pushing up, this is the S&P 500 there, pushing up against new highs. Is this the chart, David?
Yeah, that's the chart. You can see the box I've got highlighted as we approach there, that the pre-2022 correction high. I mean, there was a little bit of a consolidation there, with the idea, again, thinking that, oh, we're going to hit that all-time high, we're going to pull back, and then break right through that. But we ultimately ended up going back, breaking out from that, and eventually going up 27% there, spanning from the end of 2023 through the beginning of 2024. And if you look at to the far right, it's a very, very similar pattern that we're seeing right now, coming off of this low point.
And David, where does sentiment fit into this? I noticed that this particular chart that you're showing, shows the bottom in 22 coming off historic levels of pessimism. You saw similar pessimism coming into the fourth quarter of 23, which you mentioned, and now you can argue that what we saw a couple of months ago was even more bearish than either one of those times, depending on how you calculate it. And so from extremes in sentiment, reminds me of the old John Roque saying that we're not in a reversion to the mean business, but in a reversion beyond the mean, particularly from extremes in sentiment. So how does that fit into your thesis?
Yeah, I mean, if you look like that move that we had in 2022, if I were to draw the same kind of Fibonacci lines from the COVID low to that 2022 peak, so from one correction low to the next pre-correction peak, that drop, the bottom that we had at the end of 2022, also hit that 50%. Where it's not actually a retracement level in Fibonacci, but it hit the halfway mark from that low point. And so if you notice here, we did that again, but we did it in a much, much shorter time frame than what we did in 2022, from one correction low to the next pre-correction peak. And so I think that, it was if not the strongest bearish sentiment in such a short amount of time that we've had. It was ranked right up to, I think, like 1990 levels bearish sentiment in such a short amount of time. And as a result, we dropped pretty considerably. It was almost 20%, but 20% of that move off that 2022 low point obviously is as big of a deal as the 2022 drop, the full year drop that we had coming off the COVID low point. So it was a significant drop because of the sentiment, and the sentiment's rebounding. It's reversing already, and we've seen that. Obviously the price will lead any kind of sentiment indicator you're looking at. Price will always lead that, and that's what we're seeing here.
That's a great quote, that price will always lead any sentiment indicator that you're looking at, right?
Yeah.
That's
price always leads.
there.
It's the chart tells you everything, and then everything else kind of tells you how that price is functioning. But price will always lead any kind of indicator you're looking at there.
Nice. You guys pay attention to this? This is exactly right. Spot on, David. How high do you think we can go here in the S&P 500 if we're coming off such extremes in sentiment as you just laid out? I agree wholeheartedly, but we talking S&P 7,000, 8,000, 10,000, a million? Where are we going?
No, I don't think we're going. I don't think we're going up. I don't think we're going to have the same kind of move that we had there. I don't think we corrected as much. Yeah, we dropped 50%, but put that aside. Like in terms of like what did the market correct? Like anytime there's a correction, anytime there's a bear market, it's a reset of things. And we didn't really like this little pullback that we had in 2025 as deep and as quick as it was. I mean, it didn't really reset anything. We're right back at it. We are right there. I look at long-term valuation ratios. The CAPE ratio, of course, is a very famous one.
And what is a CAPE ratio?
It's a long-term PE. It's a PE ratio. I'm sure a lot of people have heard of PE ratios, but rather than looking at the last year or the forward 12 months of earnings, it looks at an average of the last 10 years. So 12-month average of the last 10 years worth of earnings. And then they adjust it for inflation because it's such a long time frame. So it kind of gives you an idea of just how overvalued or undervalued we are on a long-term basis, kind of putting together future returns. And like it's not common for us to be above 35 on that CAPE ratio. And we're at 37 already. We're not even back up to new highs yet, and we're already back up to 37. So that's not going to like keep us from going up, because nothing can keep bullish sentiment from pushing prices up. So that's not going to keep us from going up, but it can limit the size of the move. Whereas coming off of the 2022 low, we had that was a 77% rally in a couple of years. That was I'll take 77% in 2 years coming off of a low point like that. I don't think we're getting that kind of move. So 6,500, a 10% year to date, 12% year to date return for the markets from this point going forward would actually be a really, really good return considering the beginning of the year.
Do small caps lead there?
No, I don't think so.
Wow, hating on the small caps, David. Tell me why.
It's a market cap weighted, society that we live in. So, the winners win, right? The winners win and they keep winning. So I think your large caps, your mega caps, especially, and I've got a couple of charts there. Obviously, like some of the mega caps have been leading the way. Microsoft in particular has been a really, really good mover through its earnings.
Throw that one up, guys. Throw up the Microsoft, please.
Through this rally here, you can see it. Look at that. So I've got the directional movement index down there. It's a
so walk me through what these is. There's a lot of lines, a lot of colors, right? Yeah. So I'm not sure what any of these things are, so I would love to hear your thoughts.
So the directional movement index is a very common indicator. The average directional index down at the bottom, it basically measures the strength of a trend, how strong a trend is. And so the black line is an average of those two colored lines, the positive index in blue and the negative index in purple. And so anytime you're above 20, you're trending. And in this case, we're above 40. So Microsoft's on. It's basically that indicator is telling us that Microsoft has gone parabolic, and that's not a surprise considering how strongly, how bullish it was after its earnings. You can see the big spike there recent on this last earnings result, and then the rally we've had since has been a really, really good. Like we've really built on that gap up to the upside, which is not common. Like you see how we gapped up and we actually closed lower on the day of the post earnings on Microsoft. And then we gapped up the very next day and then just kept going. So that's been a big leader. And so like these kind of stocks are going to continue to lead. Now pull up Apple. I got a chart of Apple there.
Big difference, huh? Big difference.
Big difference. So Apple is coiling. So you think about like, and I always tell my clients about this idea of potential energy converting into active energy, a scientific analogy there. But that's what a coil is. A coil, when you've had a lot of volatility like we did in April, and then it just starts to, like, the highs get lower and the lows get higher, and we just start to just go sideways into a very, very small and a tight range. And that builds up a lot of potential energy to the point where, at some point in time, there'll be a breakout to the upside. And you can see Apple is still below its 200-day moving average. The S&P has gone through it. A lot of stocks, NVIDIA, Microsoft have gone through it. But Apple's been stuck here. And it's still, again, one of the main components of the S&P 500, of the NASDAQ 100, of the XLK sector ETF, whatever you want to look at. It's still a very, very important stock.
Is Microsoft the biggest now? Is it the biggest?
I think Microsoft, if it's not the
I'm
biggest,
looking at it right now. It officially
right
is the largest component of the S&P 500, 6.81%. Nvidia number 2, Apple number 3, Amazon 4, then Meta. And then looking at the Qs, Microsoft also the largest weighting there, 8.64% for Microsoft, compared to number 2, Nvidia, Apple, Amazon, Broadcom, rounding out the top 5. So Microsoft, largest component of the NASDAQ, largest component of the S&P 500. Call me crazy, but that's kind of a big deal.
That's a big deal.
It's making new all-time highs.
And you can see why, right? Because I mean, it's going parabolic, and Apple has gone sideways. So you can see why Apple has dropped to number 3 as a result. But that this puts a lot of energy into Apple to a breakout point. And so if we are going to make the next leg higher past 6150 up to whatever the return will be for the rest of the year, Apple has to participate, right? This one would have to break out of this coil and participate, get back up at least to the 200-day moving average, if not beyond that.
David, you brought a chart of the dollar. I got to tell you, I love you for that, man. You know, you're old school like me, bro. You know, you can't help yourself. You know, we're here talking about stocks. Dude brings a chart of the dollar. I mean, a man of my own heart. I mean, oh, God bless you, man. Good for you.
Yeah, very, very important. In a market analysis, you have to know what's going on in other markets. You can't be just in tune to just one narrow segment.
I mean, I agree. Obviously, I agree. But people think I'm crazy. So nice to see another crazy one out there bringing in the dollar chart in the stock market conversation. Love to see it. Yeah.
Traditionally, the market likes when the dollar pulls back a little bit. That wasn't the case earlier this year. There was a positive correlation temporarily with the stock market. The dollar fell, the stock market fell into April. But
every other stock in the world was going up. Like everything else was working, just not America. So stocks did do well with a weaker dollar, FYI.
Yeah. Yeah, internet, especially developed markets, just knocked it out of the park. That's after like what, years of underperformance in those areas.
But it's hard to say that stocks didn't do well early on in the year. It was just the American ones were having a hard time keeping up.
Yeah.
Let me ask you this, David. Let me ask you this. See what your thoughts are, Mr. Dollar Guy over here. For me, it's easy to say that stocks were doing very well with the weaker dollar because I look at stocks as an asset class. I don't look at American stocks. I'm an earthling. I look at stocks on Earth. For me, the rate of acceleration of the dollar, in my opinion, accelerated that rotation into other parts of the world at such an aggressive rate that U.S. stocks were being used as a source of funds because that rotation was happening so quickly. And the dollar falling apart really helped accelerate that and really squeeze the hell out of, people with too much U.S. exposure and not enough exposure around the world. That was my theory in real time. And in hindsight, I think that's still spot on. I think the market in the U.S. coming back so quickly, in my opinion, reaffirmed that was in fact the case. You think there's something there? Do you think that's right?
Yeah. I mean, the money. There's been literally years and years of outperformance in U.S. equities, especially in these mega cap names relative to international stocks. Again, that CAPE ratio I told you about, like when you compare it on the U.S. relative to these developed markets in Europe and Japan, like we're double. It's twice as high. So there is a huge divergence that's built up over time. And once that dollar finally kind of broke on a long-term basis to the downside, it was like, okay, it was it was buy the oversold market. And right now, or at least earlier this year, the extremely oversold market on a relative basis, because everything's relative, right? If you're going to put a dollar somewhere, it's not going to be put somewhere else. So it's one or the other usually when you put your investment dollar somewhere. And it's been in the U.S. market for so long that it hasn't been in these others, that it was just it was an extreme oversold bounce into these areas that have just been forgotten for how many years? I mean, through COVID and beyond.
Yeah. I mean, 15 years. I mean, you can argue. I mean, people, relatively new to the market, have never seen international outperformance. I would encourage everybody. And David, speaking of, stupid human tricks, when you study bull markets going back forever, the U.S. is an underperformer in a lot of those.
Right.
Right?
Yeah. You have to be aware of other markets. You can't be just stuck into a single one. And as low as the dollar is, like that's the pattern I had on that chart. Was it's a very similar pattern to what we saw last year.
Throw it
But
back up. Throw up the dollar chart again, please.
Instead of a breakout to the upside that we saw at the end of 2024 going into the beginning of this year, you can kind of see how the gap, like those are all moving averages. So a lot of people might be familiar with moving averages, and when there's a lot of momentum, the moving averages expand, as we saw in April and March. So big gaps between those different time frames of moving averages, and then as we go sideways, you see those gaps just really contract. To the point where there'll be another breakout move. And last year in 2024, as you see, there was a breakout move to the upside. We rallied up to the upside. The stock market actually rallied a little bit that year. Again, outperforming international stocks pretty well at the end of last year, going into the beginning of this year. But I don't know if that's necessarily the case. I think people see a chart like this and think, "Oh, the dollar's really low. It's at 100. It's the lowest point, or at least close to its lowest point in the past year." That's actually not a low point historically. Even in a relatively recent past, it's been down into 90, into 80, close to 75. So a breakdown in the dollar, which I believe would be very bullish for the U.S. equity market, a breakdown in the dollar there would it's coming out of this consolidation is a very likely scenario. It's a very high probability scenario, in my opinion.
All right, David, let's play this game. So dollar breaks down. It's bullish. No arguments here. Do we get a similar situation where they're coming out of U.S. and buying international, or do you think it's all systems go across the board and they're all doing well?
Yeah, I think they would all do well. I think U.S. would outperform because, again,
you think U.S. outperforms in a weaker dollar environment?
Yeah, and in this case, in that initial surge, the U.S. outperform initially because, again, U.S. stocks are still the big heavyweight, even international. When you look at all the world market together, it's still the largest. We're still Microsoft, Nvidia, Apple are the largest in the S&P 500, but they're also some of the largest in the entire world.
Of course, the largest in the world. They are the largest in the world. Right?
So you have Saudi Aramco and companies.
Does that count though?
Yeah. Who knows?
Everybody always throws that one out as they're Saudi Aramco. Does that count?
Yeah.
Or is it
more
in it? Or is it Taiwan Semi's the only one that counts?
Yeah, Taiwan Semi would be another one. But they're still, they're up. In the U.S. market as a whole, is just such a large percentage. If there was a strong move in risk sentiment, risk appetite, then U.S. stocks should do very, very well in that environment. I think if there's going to be another strong outperformance of international stocks over U.S. equities, it would be because we're in more of a bearish environment again in the markets. That from a long-term perspective. Yes, they might outperform a month or two, but from a longer-term perspective, over the next year or two, if international equities are going to outperform U.S., it's not going to be because we're in a strong risk-on environment. It'll be the opposite.
All right, so dollar rolls over, stocks go up. What's the best performing sector in the back half of 2025, Mr. Settle?
XOK technology, chips, those big names. I still would say go with the big names and ride them up to the upside. They're XOK, XLY, XLC, right? The big magnificent 7 names. If we're going to have a 12% gain to the upside, which means most likely the Fed's not cutting rates, right? They're not going to cut rates. They're going to keep rates the same through the end of the year. I know they're on the table for the end of the year, but the markets love it when they take them off the table. So as we get to the end of the year, the Fed's taking those cuts off the table. We go up 10, 12, 15%. It'll be led by the same names that lead us always.
Some final words of wisdom, David. You've got more experience under your belt than a lot of investors out there. You've seen a few cycles. Leave the folks with something good.
Yeah. So I would say I saw something on Twitter about how staying in the market, buying and holding outperforms timing the market. And the reality is, like, for the bulk of most people that are listening to you, for the bulk of their portfolios that because I would assume that most people listening to you are actively managing their accounts. And if that's the case, you shouldn't ever be timing the market with the bulk of your portfolios. That's why whenever people say that, like buy and hold versus timing, well, for the bulk of your portfolio, you should be you should be holding. Like if you're ever in cash, that is like the most extreme bearish position you can possibly have, is going straight cash in your in the bulk of your portfolio. So stay invested. But in your active portion, the portion that you want to set aside, that you want to really active, that's where you can produce the alpha in your portfolio, the extra return in your portfolio. You can time the market, but just know that the predominant trends like that first chart I shared you, like really quickly, if you can pull up that first chart I shared you, and I'll leave this with you. Every pullback, that red tag, that you see, that every red tag we get. This is why I always tell, because I go to high schools and I teach about investing, and I try to.
Nice. That's cool.
Yeah, and I'll show them this chart, and I'll say, what comes after every single red tag that you see on this chart? And they'll say a green tag. And say always. Every time you get a pullback, 5%, 10%, whatever, there's always a green tag that comes after that. The market always comes back up to the upside. So if you're going to time the market and be active with your portfolio, just remember that once you get that 5% pullback, there's usually a pretty good double-digit number in a green tag that's coming after that. And even if it's a 10% drop like we had in 2023, then there's a pretty good number, a 27% in the green tag that comes after that.
I love the fact that you're going around high schools.
So you always want to be in the direction of the trend.
It's so good. David, how far are you from Park City?
About an hour. Yeah, an hour away. We're in Central Utah.
Next February, early March, we're all heading out to Park City. We're gonna have a little shindig going on, nice little private event. I would love for you to be there and join us.
I would love to be there too.
Nice. Looking forward to that. Park City for Portfolio Accelerator. It is a done deal. We're doing it. David just confirmed that he's going to be there too. So now we have to come. Now we got to come.
You have to do it.
David, I appreciate the perspective. You're the man. We'll have you up on the show again soon, please.
Hey, thank you. I appreciate it. We'll talk to you later.
All right. Adios. David Settle. Fantastic. Shout out Utah. What a beautiful state Utah is. They got a good whiskey there. What's that rye that I get? I get this double barrel rye. What's the distillery that's there?
Oh.
Yeah, there's a great distillery.
I like whiskey.
Double barrel rye. Fantastic. I'm not like a big whiskey. High West. That's it. High West. Everybody get involved with the High West. Perlman earmuffs. If you're out there listening.
I like the Japanese whiskeys.
They're
nice and light.
The people that like the Japanese whiskeys are people that like Scotch.
Yeah.
Right. So like Danny, for example, Danny Jazz, he's a big Scotch guy, so he likes the Japanese whiskey. Me,
Yeah, see, you're a Jameson. You're on the other side. You're on the Jameson side. And a lot of Scotch people can't do the Jameson. The Jameson feels very hard.
Yeah, I like the viscosity of the Irish whiskey.
It's heavy, man. It's hardcore.
The viscous nature of the whiskey there in Ireland. I want to give a big shout out to Ireland. Ireland stock market making new all-time highs, finally breaking out above the great financial crisis highs. Ireland is a fantastic country. What a great country Ireland is. Holy shit, I love Ireland so much. All right, guys, I got to hop. Mary, we got Mary in the show, finishing things up. I will see you tomorrow. Adios, guys.
Hey, everybody. I don't know why we do that either.
Good morning. That was a hard pivot.
I can only do so much with that,
Oh my goodness. That's okay. I mean, from David to whiskey to, hard pivot to me. It's all good. JC's
Have fun
gone.
with Mary. Bye.
Peace out. Oh my
What's up,
gosh.
Mary?
Hey,
What's been going on? What's been going on in your market world?
oh my goodness. Well, my market world got rocked because I've got kids at home now for the summer. And
Uh-oh.
so my time is not my own. I'm back in mom mode 24/7. So
So do you have to reduce trading in these months? You gotta bring your activity down, right? Kind
I
of keep it
do.
simple. Okay.
I do. Yeah. So I'm looking much more long term, just kind of big trends. You know me, I love to trade the junk, and I've got a
Yeah.
portfolio full of the arky trashy stuff, which has been working out great. I've got the cryptos, and that's been working out great. But
Nice.
I can't get in and out of things as quickly as I normally do
You know
because
what you do,
it's at
Mary?
home.
Maybe extend your time frame a little bit. Look less for the tactical patterns
Yeah,
and more for the primary trend patterns. And then you don't need much time in front of your screens when you're trading the primary trend reversals.
precisely.
That's that's the move.
So funny that you say that because we're going to zoom out to the monthly
Yeah.
charts. Yeah.
Do it.
And I'm curious, I want to get your perspective on this because you guys have not really been talking semiconductors much
No, I
lately.
like it. No. I'm in. I'm in. Talk to me.
Zoom out on this
Look at this.
chart.
Woo, my
Hello.
God. Look at that
To
candle.
me, oh, I know. Like to
So
me,
good.
this feels like the most bullish chart in the market. That's my perspective. And we're pushing towards all-time highs. Obviously, some of us have some catch up to do. But I mean, they had this big move, and then for go close to a year, we were just sideways. And I mean, look at those candles. There were like 6, you could even argue 7 dojis, just doji after doji after doji after doji. And then we of course had the break. April happened. Then we have that monster hammer candle that comes off the bottom. And since, I mean, it's been strength after strength after strength. So, and right now, obviously, I know monthly chart, we've got a whole lot of a month left to close. So this could very much change. But right now, we're breaking out of this flag. As of price last night, this was breaking out of this flag formation. So let's zoom it in to a weekly because this is also super sexy because I've got VWAPs anchored from the lows, VWAP anchored from the high. We gapped above that VWAP back at the beginning of April and have held it. That is super, super bullish to me. And again, we just keep moving higher. And so I've started, poking around in the semiconductor space, the large caps, the mids, the smalls, the equipment, and all the picks and shovels and all those kinds of things. And, I guess in my mind, the fact that we've been talking a lot about the quantum computing and, the space helicopters or the flying cars, I mean, all those are going to take chips, right? So you can't have a bull market without the chips. And I feel like there's a catch-up trade for some of these stocks. Some of them have been serious losers and still below VWAPs. But, the big guys, NVIDIA, obviously the biggest of them all, starting to push up towards those highs. If we get above 150, next leg higher. I've been kind of going through just the holdings of SMH, Taiwan Semi above 220. It's pushing up against highs. Broadcom was kind of the leader of the pack here for the last couple of weeks. They had earnings, and
I would
go ahead.
I would say look at the bad ones too. Look at
Oh, for
something like
sure.
AMD, 80 to 125 off the April
Yeah.
low.
Oh,
So
I like him, AMD too.
you're not going to get a morsel of pushback from me on this. This is great analysis. This is a pro take. Okay, there was a lot of talk about intermarket with David and JC just earlier on the show. What Mary's doing here is intermarket analysis. She's saying this is the most
Ooh.
important chart in the market. These are the most important stocks in the market. For this bull market to have legs, it's going to be some sort of nice prolonged bull cycle. Semiconductors better get back on trend. It's been
Precisely.
a year of digestion. After these were the top stocks, early leaders, the poster child for this bull run. This is AI in an index. Semiconductors. They can't quit on us. Not long ago, we were talking about this. Throw back up the SMH. The monthly is just so good. Not long
It's so
ago,
good.
we were talking about this SMH and the equal weight stuff and even the relative trends in semiconductors. And we were saying, oh boy, do these look toppy. Not anymore. They went fail top on us. And you're right, Mary. No one's talking about them anymore. That's exactly when you want them. new all-time highs for semiconductors. It won't be long now. Look for NVIDIA to catch back on fire. Like you said, Broadcom's already there. Look for the bad ones to catch up. Shout out Micron. Big level in Micron. Zoom out on that bad boy. Been waiting all my life for this base to take off. All these things are happening now. Hold up. Ouster, O-U-S-T. Throw up that one, Fonz. I mean, semiconductor stocks I never heard of. These bases are beautiful. They're perfect. You can't go wrong with the semiconductors here. I just love it.
So that was kind of the main chart that I wanted to talk about today was the SMH, and just kind of challenging people, just go through components and just start looking up semiconductor stocks, because you're going to find base after base, or taking out the VWAPs, several of the smaller components of SMH, like Qualcomm, and I'm trying to think a couple of others, maybe AMAT. They're right there at that VWAP. And so it's an obvious place. Takes out that VWAP, get involved and use that as your out. There's just so many actionable levels right now. Analog devices also starting to push up against, I mean, it's got a little ways to go, 250. Texas Instruments, just like I said, there are very obvious levels, whether it's going to be the former all-time highs, or it's going to be that VWAP anchored from the highs. There's a lot of tradable opportunities there in the space. So go take a look.
And you would lean into the leaders rather than get cute with the laggards. That's what I'm hearing, I think, right?
I build a basket. I learn from the best. No, I'm doing both. I've got leaders, and I mean, I started to position back in April. I mean, on that whole volatility stuff, we came down and touched that VWAP from the lows, and then broke back through it, and I was buying. So I was buying NVIDIA again. I was buying AMD. I was buying ASML. I was buying, just all of them, TSM, Broadcom.
Yeah.
But
no, that's great. It's becoming one of those environments where a lot is going overlooked because so much is working. People are out here talking about the quantums and the space names and all this crazy stuff and all these new hot software stocks. Everybody forgot about good old semiconductors. The industry leader in terms of semiconductor equipment manufacturing is KLA.
Yes.
Basically at new all-time highs at this point.
Yeah,
Look at
another one.
Look at the run since just last week. I mean, some of these bull flag resolutions in the semiconductor space, look at the Micron, have been incredible.
Yep. So that's kind of where I've been poking around, just because, I mean, semis, it's risk on. It's fairly safer than some of these wild, some of the trades that you've been putting on, because you've got the time to be in and out of things very quickly. Semis feel a little bit safer to me. But like I said, the charts just have been speaking to me, and I've just been surprised that we haven't been talking more about them. And so that's why I wanted to bring it up today. I did bring one actual other chart with me, kind of in this same vein, and that is, Fonz, throw up the advanced energy industries. So this is one that is in the semiconductor space. They are an industrial electrical equipment, parts, that kind of thing. But they do supply something about the semiconductors. They had semiconductor in their profile description, and so that was enough for me. But this is the monthly. So again, massive base. You could call this cup and handle. I have been triggered on this number of times back early in the year, and we just couldn't hold the breakout at what is that price? Right around 120, 125. And finally, right now, as of this week, we're holding it. And so I'm back in. We'll see if I can shake it up by the end of the week. But what's really interesting, Fonz, flip back to the monthly. If you do Fibonacci extensions from that 2000 to 2017 base, we are right at that 1.618 extension. And so that's where we've been having all of this resistance around this 120. So if price is above 120, I think you can be long this one. And I mean, that's a big base. And big base, higher the space.
Monster base. Yep. And also there's a cute little tactical base on a relative basis I think you could use as confirmation.
Oh.
Really good
stuff. Take a look at that. Yeah. So go look at semiconductors.
How about crypto for you? Not interested?
Ooh. Oh, I'm in. I'm in. I'm just not. I'm not trading down the cap scale into the super junky stuff because I
Yeah.
just don't. Like I said, I don't have the time to be in and out. I've got Bitcoin, I've got miners, I've got Coinbase, MSTR, Ethereum, Solana. I've got the big boys.
So we're going to end the show now, and I'm going to tell you guys exactly why. When Solana breaks out and reclaims VWAP, what I usually do, it's really simple. I buy Coinbase calls. Solana and Coinbase, they move together. They go together like Bitcoin and MicroStrategy. I can't explain it. It kind of makes sense if you think about their business. They make money off of fees on altcoin trades. Solana is scooping, it's scoring, it's dipping, it's ripping. Coinbase calls, not cheap, not cheap. But I think that's the move. So coin, you got a VWAP that's looking to reclaim right here, 257 happening now. I'm going to go buy calls. If I'm feeling crazy, maybe I'll buy some Connell calls too. I already own some, jumped this entry a little bit last week, won't lie. But I think it's time to go. And Coinbase couldn't think of a better vehicle to ride the next leg up in altcoins.
A nice little flag there in Coinbase on the weekly.
All right.
Yep.
Izzy, take us out. Mary, thank you so much. Everybody, thanks for watching the morning show. We will be back tomorrow, as always, 8:30 Eastern time, right here. See you then.
YOLO responsibly.
I can't take no loss. I don't even know what it costs.